Bitcoin is creating history right now with this parabolic run to new, fresh highs. In some markets, it has even hit a new all-time high like our beloved Aussie dollar. But back to the USD, this month is the biggest month in history for gains on Bitcoin. It's currently sitting at $19,000. Now we have one more day to go, the beautiful 29th of February, which only comes around once every 4 years. We have 24 hours to go to see if we can hit that price target to give us the next signal for those new all-time highs. Now, of course, it's not that far away, but like we can see from history, when we get to these levels, when we get to this closing price at the end of the month, crazy, even crazier things happen from this point. All right, so make sure you hit that like and subscribe. We're going for 400,000 followers, subscribers on the channel in 2024. It's your home of macro cycle analysis. We've been here since the lows, calling for the lows in the stock market, real estate, and of course, Bitcoin. How do we do it all? Follow along on the channel so you can find out. Links in the top of the video description for our TIA premium sale. There's 24 hours to go on that. And of course, our channel sponsors with SwiftX in Australia. If you want to set up your crypto exchanges, check that out. Bybit and BitGet. All right, guys, let's kick it off with the quick quote. It is crazy. I know markets can remain irrational longer than you can remain solvent. Please, for the love of whoever you trust in, do not try to short a bull market on every single move to the upside. Now, there were a few comments from yesterday's video looking through what's going on here, and some thought that we are looking bearish. There is no chance, absolutely no chance. Let me make that clear that we are bearish on the market here. We've been looking and preparing ourselves, analyzing how the bottom was forming and looking at how we saw very, very severe corrections in the markets, or at least feelings of severe corrections. You can see they were 20% during 2023. And that's how we were analyzing the bottoms to be in and that a bull market was to follow. Now, there's more time to go in the bull market, but when these runs get extreme, like what we're seeing today in the month of February in 2024, when they get this extreme, there is cause for caution. They can run higher. Look at what happened in the previous cycle, 2021. You can see it run up from the low of 32K to the high there of $58,000. And of course, there was a significant sell-off back down to $45,000. So the main thing that I want to bring up here is a couple of big things for today. It's a bull market. Hold on for the ride. Have an exit plan. I'm going to come back to this in today's video as we look at the market continue to rise. Don't try and exit 100% of your portfolio all at once, because that makes life very difficult. It is so hard to do, to try and time that thing to a T to get the absolute top with 100% of your portfolio. Just start to scale out so that you can at least take some profits. Now, I'm not getting bearish on the market. As I said, relax on the bearish side. I do want everyone to succeed as best as they possibly can. Take as much money from these markets as you possibly can, because talk to anyone from 2021 or 2017, which was the market I was first involved in here, a lot of it was left on the table as the market came back down. I'm not saying we're going into a major bear market. I'm just saying on the rise up. There's no shame in taking some profits on the rise up, even if the market goes further, because remember, we've been here since the bottom. We're looking at the lows coming in. Now, if you are joining the party a little late, we'll get into that a little later in the video. The main thing to do is try not to get too swept up in the bull market. Remember, they do call the bull market for a reason. It's okay to be cautious in these markets. They don't call a bull market for no reason. You got to hold on for these ride, and the ride can be very, very severe. There is one thing that's missing, and that is basically a lot of retail coming back. Of course, there's retail here, but when we look at the Google Trends and the search terms, well, crypto pretty much sitting at 10, which it has done for quite some time, around 6, 7, 8, now starting to climb to 10, which is good signs. And then also Bitcoin, which is just sort of cooling off this last month. We had higher search volume when the ETF was announced, and now that search volume has died out. So what I'm saying here is I'm not bearish at all. When it comes to being bullish, it is okay to be cautious, because you can see that the markets can pump up and then eventually you'll see some sort of corrections. So the main thing to do is try not to throw your whole load at the market at one time in the excitement, but divide that load up and then have a plan for any other funds that you have come through in your account, maybe from a job or things like that, that you can potentially throw in later if we are to see some sort of corrections. So not bearish, not macro bearish by any stretch of the imagination, because we are in the 18.6-year cycle. I believe we still have a lot further to go here when it comes to the macro markets, looking at the stock markets and of course real estate. But Bitcoin and cryptos, that is, it plays a much more volatile game than the traditional markets for obvious reasons, and that being one, the liquidity, and two, the market caps. And then if you feel like it, add in any other reasons. Let me know in the comment section down below. I know you guys always do a great job down there as well. In terms of the S&P 500 and what's going on there now, before we get into the BTC and the major levels there, just having a quick look at this bull market, because we still need to keep ourselves in check when it comes to the bull market. Now, the S&P 500 has seen 15 of the last 17 weeks in the green. And what does that mean overall? There's several data points here. Many of these have come up around the same time, 1957, 1958, a lot of them there, 64, 71, 72, 89, and most recently. So 15 of the last 17 weeks, barring 1957, 12 months later, 52 weeks later, the majority of time it has been very, very green or black in a profit. What can we make of this? Potentially in the short term, you may see some corrections. That's what we've talked about, and there has been single digit corrections on the S&P 500 and for the NASDAQ. And you can see from these particular readings here going 1 to 4 weeks. We've even got 8 weeks here, so that's your 2 month. You can see very simply single digit corrections through 71, 72, take it back to the 50s as well. When you've got these sorts of runaway bull markets, single digit corrections are well, I'd like to see more than single digits, but they are normal in these bull markets that are running away. So the main thing to look at now is this timing into the peak and trying to keep ourselves in check. This particular data point here, looking at the piece here, is essentially saying that we can see further upside. There's a lot of divergence happening with the 52-week highs and lows. How many are moving to new 52-week highs versus how many are moving to new 52-week lows? And this can show up as a divergence where you're starting to see more drop off and only a few taking the bull market higher, which is early warning signs. We've talked about that, but this is looking at the bigger picture before you freak out, months to potentially years. Now, it's happening across multiple time frames, and the idea here is that it can continue on for longer than some anticipate, where they start to believe the market has to collapse in 2024, second half of 2024, and so on. We hear that over and over again. Essentially, bull market is on, ride with the trend, as we talked about here, hold on for the ride, have an exit plan, but it's okay to be cautious as the market goes up because, well, it's a bull market and eventually these things do come to an end. So in terms of the big one here, looking at the monthly closing price, which we have about 20-ish hours to go here, 21 hours for the S&P, and for Bitcoin, we have 23 hours to go. Now, we're looking at the closing price of the highest monthly closing price in history. That goes back to October of 2021. That price was 61,343. So draw up some alerts, draw a line on your charts. We'll check it out again tomorrow in tomorrow's video on the 1st of March. Looking at how or where this market closes. What we've seen in the past in many markets, even on the S&P 500, is once we see the monthly close above the previous all-time high, generally it is signs of further upside. We saw that even just recently in December of 2023 when the market closed at 4,812 points. The all-time high here was 4,808 points. So just a few points higher. And well, from that point, it kept going higher and higher. It's always important to be cautious in these markets, especially when you start to see some of the big runaway stuff. We've seen a lot of excitement come into these markets, and we can go back and test that through many different periods here. So you can see even as far back as 2007 at the pinnacle of the last cycle for the stock market before we had that mega collapse, October closed just under the previous all-time highs on both accounts, from the 2000 boom and bust, even as early as July 2007, it closed just under that. It's not saying the market has to collapse from that point. It's just that it's slightly weaker for a period until you start to see further signals, especially of monthly swing bottoms getting broken down, the retest, and then the collapse. Same sort of thing happened for BTC as well. So just looking at these particular closing prices on Bitcoin, from the previous cycle, you had a close here at 13,863. You had October running out, closing above all of this previous range, which was showing some pretty significant strength. And that close was 13,804. So it was a few dollars off. And it wasn't until the next month in November that you did have that big close above the highest close here. The top was 18,892. The closing price, 19,714. So it was still much higher than the closing of the previous month, giving you that signal that things are probably not definite. There are no definites 100% in trading or investing, but giving you that early warning sign that things are probably going to get very, very hot and heavy following this big, massive close to the upside. Now, the parabolic run that we're seeing on Bitcoin continues to steepen. It's not the greatest thing, but I don't want to get bearish on the whole scenario because the chart is still up. We're just following the trend. The trend is still up. But as it gets more parabolic, as I've said many times, it's a cause to be cautious because the volatility increases. Like we saw overnight as the price ran up to $64,000, it quickly swung back down to 58. It's like a 10% swing in a matter of minutes. And that occurred through crypto exchange here, Coinbase, suffering an outage at that time. And I think there were several other exchanges that also suffered some downtime. So you guys coming through in 2022, 3 and 4, you're starting to know what the previous cycles were like. This happened all the same in the previous cycles. Every time there was extreme volatility, the exchanges went down, whether it was Binance, whether it was your whatever exchange you're using, a lot of them went down at these critical times. Now it's opened up again. We've seen price continue up, at least in the last few hours, getting back towards 62, 63K with a slight pullback, now at 61. So that leads us to the shorter term pullback levels. Where do we go from here? We've hit 100% of the weekly range coming back from the SEC drama to the peak at 49K, the ETF peak top, back down to the ETF correction, and the market has done 100% move of that particular range. So as for the volatility, this is where things can get very scary entering too late in the move. The swing to the downside, there's not much supporting the market until you get back towards roughly $52,500 to $53,000. So in terms of the top to that level, that would give us a rough 18% correction. Now, if you take it back to the swing lows here, that's a 21% correction. Back to the ETF top, that gives you a 23% correction. And then back to the range of roughly $45,000, which was that mid area, takes us back to about 31% correction. So as we get to this parabolic rise, the volatility increasing with those big swings in the market, now we can start to see that there is a possibility, not saying it has to happen, but there is a possibility of those bigger swings to the downside. These times in the market are pretty difficult to navigate, which is why it's always important to get set in a position earlier on when there is less volatility in the market. It just allows you to sit easier, sleep better at night. As you start to see the prices rise, it feels a lot better. Trying to enter when things are going nuts is very, very difficult. So although I'm still on the side of the bulls, I've seen questions or comments saying that this feels very bearish. The point being, again, is to remain cautious when things are flying. I want you to succeed in the markets and I want you to make a lot of money. I'm not going to come on here and tell people to start loading up on everything because this is your last chance and they're going to skyrocket to 100 or 150 grand. So that's what to look out for to the downside if, in fact, there are any corrections. The closing price is the next big one happening in less than 24 hours. So it's a good thing to see this market continue to rise to the upside and hopefully close above those levels, especially for those big macro bulls looking for new all-time high prices before the halving, which hasn't happened before in history. I'm not saying that this time is different. We're looking at cycles and strength and weaknesses of particular cycles. Now, in terms of what has happened this time, what actually has happened, we've seen a new all-time high for Bitcoin on the Aussie dollar. What we've seen in the past is many other currencies start to hit new all-time highs. So I think it's basically almost a given that we'll see a new all-time high for Bitcoin against the USD, but the path to get there, I don't know. I'm not trying to say that I know this thing's just going to skyrocket to 70 grand. It could have pullbacks. I don't know that. The black side is the side that we don't know anything about. As we look at BTC against AUD, just in terms of the price where it would have to close above. It's got to move all the way back down to $81,600 for that monthly close for it to be a relatively weak close on this monthly candle bar that has 23 hours to go. Now, we also have the altcoin market caps to look at. These things have been rocketing since their low in late January. You can see the low here about $320 billion. Now it sits roughly 25% away from the 50% level. That's the next price target for the altcoin market cap, excluding Bitcoin and Ethereum and stablecoins. This is an exclusive indicator that we use at TIA. You can get a link to this in the top of the video description, 7-day free trial as well. And if you are a TIA premium member, you get an exclusive 50% discount on that particular indicator. So the reason we're looking at this now is to see how much further the price could run for some next resistance levels. In the midst of those movements, you've got some lows that came in the previous cycle. And you can see we're just hitting those now at roughly $480 billion, excluding stable coins here, because many of the charts that are used in TradingView have stable coins included. So we're just looking at areas that we could find resistance for the altcoins now. There's not too much room to move there, and it's actually touched it. So if in fact Bitcoin continues to rise, then potentially you'll keep seeing those altcoins rise along with it. But their BTC values, as we've seen in the past several days, have continued to bleed out. Of course, I've just started the video. It's 1 hour into the new day, and you're seeing a little bounce here on some of the altcoins against their BTC values. But while Bitcoin continues to rise, it's pretty likely that you'll continue to see their BTC values fall. That's essentially your Bitcoin dominance. The dominance has also risen to 54%, getting close to its 50% level at 56%. Now for the total cryptocurrency market cap, we've seen some very solid gains to the upside. The price target we're watching was 2.17 trillion on the monthly swing top. And again, 23 hours to go here. We can see a close above this level here, which was the previous monthly swing top before the market collapsed from that point after the first major collapse. This one here was the DeFi and the CeFi collapse. Essentially, that is going to be another strong signal for the bulls that this market is ready to continue up and probably test new all-time highs. Note that I say probably because there are no guarantees in the market. The next thing to note is the timing. So in terms of the strength, the bulls, you definitely want to start to see the market consolidate above the previous resistance levels, but there are still price targets to the downside, which are okay. It's just going to mean a little more time consolidating before you see that next rise up. That level is roughly around these lows here at 1.6. You've also got the monthly closes that happened in December and January around that 1.6 again. So keep an eye on those levels. And in fact, if this is the top that comes in, of course, we use our 50% level from the low to the high. It also comes in at roughly 1.5. And so anything above that level is still very bullish. It could take more time to consolidate before we see the next pump. Ideally, that's what we want to see in a bull market so that we can see some consolidation, some cooling off so that we have more room to pump to the upside. Whenever anything goes parabolic, it's a huge warning. Now it can go much further than we can rationalize. Remember, they don't call it a bull market for no reason. So for the fear and greed index, we are in the midst of extreme greed. We are hanging around in these levels. Again, this can stay up here much longer than we can anticipate. And what we know from history, especially with human emotions, is sometimes it doesn't take too much of a fall in the market to reset those emotions. Like I could see from the previous cycle here in January of 2021, January, February, March, and April when we got to that peak, even these moves back down to reset it at 40, which was still around neutral on the fear and greed index, the market didn't have to break down from any other previous monthly swing bottoms. You can see that we were still able to hold up at these levels. Even on the weekly chart here, it was still holding pretty high up while these moves to the downside occurred. And it wasn't until the breakdown in April and then May is when you really got the extreme fear heading into the market. So the point here is that we can still remain at higher prices even with volatile swings in the emotions until that time's up and we get the breakdowns on the swing chart. Plenty to go over with this parabolic rise of Bitcoin price. I'm trying to keep it nice and rational for you guys, and hopefully you're able to implement some sort of plan that helps you along the way throughout this journey of the bull market. What will also help is a macro look here. Fantastic video that Michael put out today. I'll leave a link to this in the comment section down below to Michael's channel, looking at the Elliott wave count. He has nailed this throughout this cycle. So check that video out. While you're there, the TIA Premium flash sale is on for the next 24 hours. Link in the top of the video description. Thanks once again to you guys. Check out these monthly closes coming up, which will follow up on the channel tomorrow for that sign of strength. And I wish you all the best in these crazy times in the market. Thanks once again. Till next time, take care and peace out.